Hey everyone, welcome back to my channel. So today I want to talk about interest rates, interest rates, interest rates. So we all know that the Fed did not raise interest rates in November. So November 1st, no interest rates were risen. And why was that? Well, German Powell was getting a lot of pushback from banks, from mortgage lenders, from people in power, people with a lot of money and a lot of capital. And why is that? Is because they all want lower interest rates. They all know what lower interest rates will do. Lower interest rates will make them more money than they've ever made before. Why? Because people are going to continue to be consumers. People are going to continue to spend money. And so when you're tightening the economy, when you have treasury yields super high, when you can make 4%, almost 5% on a treasury yield, then of course, if you're going to lend money, you want to make more than that. And so now we're seeing mortgage rates at 8% without points, right? And everybody's going to say, listen, I just bought a house with less than 3%, right? I just bought a house under 4%. I just bought a house under 5%. Why would I go and purchase a property at 8% interest rates? And if you have bad credit, it might go as high as 9%. So, after looking at all of these factors, right, the housing market has priced out almost everyone except those who are dual income households making six figures or more a year. They can possibly afford something, but do they just want to afford something, or do they want to truly live life, right? Buying a property right now is like one of the most expensive things that you could have ever done. Buying a house used to be your most expensive purchase of your entire life. But in this market, it'll be the most expensive purchase, not only for your life, but maybe even your children's life. And I'm not even joking about that. I am so serious. And so, the one thing that we do know is that for all those who are a little upset, interest rates went up, you can't really buy the car you want, you can't really buy the house you want. Credit cards are now at 20% interest. Like, it's unbelievable. Can you imagine owing someone 20% interest? If I give you $100,000, I'm going to need $120,000 back. That is insane, okay? But that's where credit cards are at right now. The good news is that we're almost at the worst of it all. And the reason why I say almost is because I am one of the few, and I may be wrong, I am one of the few who believe that although I think it's a strong likelihood that they just stop where they are and just wait for the corrections to happen, I think that the government will make one more push. That's right. I think if they see that the job market is strong, if they see that people are still going out buying and financing whatever they want, right? If they see all of that taking place, I do believe that there will be one more push. I don't think that it will be higher than a half a point, but if they're going to stop raising rates, if they're going to pause and hold it for longer, they're going to do that with knowing that they tried everything they could in 2023, right? So that as they go into 2024, they can keep to their promise and not raise rates again. So I think the best interest of the Fed is to actually raise rates by at least another half a point and hold it there. What this is going to do is going to price out even more people by just a smidge. They're not going to be able to buy what it is they want to buy. They're not going to be able to calculate things the way they thought that they would be able to calculate things. They're not going to be able to make real money, right? And they're not going to be able to spend money because they're not going to have enough. Over time, we're going to see the price of those expensive cars gonna literally cut people down. They're not going to be able to finance nothing. They're not going to be able to go out and eat. Restaurants, all that stuff is going to cut back. And then eventually Honestly, I feel sorry for the restaurants now that I think about it as well, because if we're really serious, restaurants just came out of a pandemic where they weren't making any money. They were surviving off of PPP loans, and everybody was spending money willy-nilly on Amazon and everything else because they couldn't go out. Restaurants get back in business. There's low inflation. They're trying to scoop up whatever they can. Everybody's going out to eat. Everything's hunky dory and fine. And then boom, interest rates go through the roof. Okay? And the restaurants were feeling good. They were trying to capitalize. They were putting taxes, gratuity on everything because people just had so much money. But now, what are restaurants going to have to do? They're going to have to take away that 20% gratuity fee, that 15% gratuity fee that they were trying to pass on as a charge that never existed, right? And so you're looking at all these things that were happening around us that were never supposed to happen. But because people are spending money, businesses are going to say, how can I make more money off of you? And one way to do that is to charge you a bogus fee. Now, will I say it's bogus in the fact that you should always tip your waiters? Of course you should. But if the restaurant is demanding that you tip a certain amount, I don't typically agree with that. And so we're seeing how a lot of people can affect the lone individual like me who would never really want to pay those things, but may have to if I'm surprised with that bill. Like, it's a surprise. Like, nobody knew before entering 20% gratuity charge. Is it on the door? Is it on the menu? No, you don't really see all that. And so those are just the small things that trickle down into our economy that has affected us tremendously that people don't really think about. You're paying more for everything, and it's almost normal to you. The price of everything goes up except your wallet, right? We have to understand how we're supposed to make money in these environments, how we're supposed to achieve what we're looking to achieve, our goals, our expectations, our standard of living without making everybody else rich, right? And if you're not able to do that in your current environment, then we need to shift our focus, shift our mindset in order to be successful. And so now here's the good news that I'm sure you all been waiting for. And if you haven't liked the video yet, please make sure to like the video and subscribe to the channel. The good news is that in 2024, they will hold it for longer, as they said that they would, right? We all know that the interest rates are going to be held for longer. You're going to see 8% interest rates throughout the entire year in the housing market. You're going to see car interest rates at 12%, 9%. You're going to see credit card interest rates at 20%. But here's the thing, in 2024, everything is just going to be at a dead set stop. 2025 rolls around, I do believe that we'll start to see a little bit of regression. They're going to do it slowly though. They don't want to just open up the fireworks, right? They want the narrative to change. They want the news to change to be somewhat of something different, something entirely different. The way that interest rates have been talked about is just too popular right now. The way mortgages have been talked about is just too popular. Cars are too popular. Once the entire world is eaten out of the hands, it's just too popular. And so we need to change the narrative. They need to change the mindset. People need to feel as though it's a bad time to buy a property. And so when everybody says it's good, it's good, it's good, it's good, it's good, all that's going to do is continue to raise raise the interest rate up higher and higher, because the more people buy, the more they're going to have to curb inflation. And so now inflation is going down little by little. Cars prices are going down little by little, but not enough, right? We used to have $28,000 new vehicles. Now brand new vehicles are $40,000, $60,000, $72,000. I'm trying to figure out how many people I know that make $72,000 a year, but they'll spend $72,000 on a car. To me, it doesn't make a lot of sense, right? Like if you don't make it in a year, don't spend it in a day. And that's what I'm trying to figure out. Especially if you got to put it on credit. And don't give me the story that, oh, if it's new, it's going to last. Well, not long enough for you to make your money back, that's for sure, because you'll be spending it right out the door, right? So we're trying to build good habits. We're trying to show people the right way to invest in their future. The average millionaire doesn't buy a car that is um, more new than 3 years old. The average millionaire will buy a 3 years old car or older. So if a millionaire is buying a car that is at least 3 years old, why would you be buying a brand new car? You're right. So that's just the common sense. That's just the logic I'm trying to make. But I can't wait for interest rates to start to go down, little by little, little by little. Hopefully it hits about 5%. Hopefully we start to see a lot more inventory on the market. And that's what I really am looking for. I'm not looking for just good interest rates to be back. What I'm really looking for is a lot of inventory to be on the market. What does that mean? That means I have a lot more options to choose from. I don't want to just buy something to buy it. I want options to choose from, because then I can make a great decision, not just a good decision, but a great decision. And when you can make a great decision on a property, that is amazing, right? We haven't had a lot of inventory. We haven't had a lot of properties to choose from. And because of that, I just feel like we're picking from low hanging fruit. It's time for a change. And so with interest rates being high, eventually we'll start to see better properties hit the market and people won't be able to afford it. And so when interest rates do go down, then we'll have options to choose from. That's what I'm looking forward to. I hope you are too. So if you like this video, make sure you leave a like, comment, and subscribe. You know I post every single day at 8 a.m. daily on YouTube and on Rumble. And I can't wait to see you on the next one. Peace.